Welcome to In the Black, Living Your Dream podcast. Once again, this is your financial design coach, Aaron Smith. Excited about coming into your living room. Look here, I have a new niece, and my new niece, man, she is lovely. She is lovely. And right now, she's starting to crawl. But hopefully in a short number of maybe, weeks or months, I suspect that she's going to be starting to take steps. And those steps that she's going to be taking is called baby steps, right? Now, it doesn't only apply to your little one, to your niece or to your daughter or children or grandchildren when they are new into this world that they start to take baby steps. Also, it implies, or it could relate to your personal finances. Right? So what we're going to do here as we go further in the podcast, we're going to also introduce the topics that we share with you in baby steps. We want you to take baby steps here. And there's a number of baby steps that I have to help you build the wealth that you and your family desire. The last podcast we talked about an emergency account. Having an emergency account, having a dollar amount in that emergency account that you're able to go to and use that will give you peace of mind if there was an emergency. This podcast, this segment, we're going to talk about debt, right? We're going to talk about the different types of debts. What is debt? I have a lot of individuals over the years who've said, Aaron, is there such thing as good debt? And, you know, I generally always say, well, not really. There's no such thing as truly good debt. But you could use debt to help you build wealth, but it's not necessarily any meaning of what is termed good debt. So let's talk about debt just for a moment. Either you're on one side of the equation or you're on the other. One side of the equation is that you are the lender. You are the lender. You're the individual who's actually lending out money to receive that money back with an interest rate or a rate of return on your money. So you're either in the position of lender, and then on the other side of the equation, you are the debtor, meaning that you have borrowed money from the lender and you have to repay back that loan that you borrowed at a rate of return. The rate of return that you have to pay back the loan depends on the risk that the lender is required to take because they lent you the money. Let me kind of give you an example. If you don't necessarily pay your debts on time, that means that your credit score, which technically they imply your character, is not strong when it comes to paying your debt back. They're going to charge the lender, the lender is going to charge you a higher rate of return or higher interest of return back to the lender on the money that you borrow from them. So, if you will, my followers here, if you will, where do you want to position yourself? You want to position yourself as the lender. That's the person who's lending the money, receiving the return, right? Do you want to be the bank? The bank is the lender. Or do you want to be on this side of the equation as the individual who is borrowing the money, which is the debtor? You pay back money with the interest that you have to pay along with those dollars. Well, in many cases, Aaron, I may have to borrow money. I'm looking to buy me a new home. I don't have the cash for it. So I have to go to my local credit union or bank and finance it. I have to borrow money. I may have an automobile or want to purchase an automobile, and I just don't have the money, all of the money, to pay cash for the vehicle. then I have to what? Borrow that money. But my followers, it can come to a point in your life where you're financially able to have enough wealth that you don't have to be the borrower or the debtor. You could actually just truly be the lender. So let's talk about debt for just a moment. You can create debt with purchasing a home. Now, it's important to make a note here. When you buy a home, you're buying an asset. In other words, a home is a piece of collateral in the event that you're not able to make good on the debt that you owe to the bank. If you don't pay the debt back that you owe, the bank can foreclose on your property, on your home. But what they get is they get the value of your home. The home that you own, generally, not always, but generally, it goes up in value every year. So every year, the way you see the trend here is that the value of your home is actually going up. So you're building what is called equity in your home because it's going up in value. And the debt that you borrowed is going down. Well, ladies and gentlemen, when you purchase a home, the majority of the interest that you pay, because you borrowed money, most of the interest you pay is within the first 10 years of the loan. That's based on an amortization schedule. And that's akin to every loan that we borrow when we're buying a house. So how do I, Aaron, build wealth with the growth of my home and pay as little interest as possible on the debt, on the mortgage? Well, what you want to do is you want to do what is called a prepay of an extra payment per year on your note. If you make an extra payment per year on your mortgage note, it drops the term, let's say from 30-year note to 20-year note. Or you can pay bi-weekly or bi-monthly on your principal. It brings down the number of years that you create for that home. Or you really want to truly pay your home off in maybe 7, maybe 10 years, or even sooner. You can start to put extra dollars to the principal of the loan to bring down the balance very quickly. That's how you start to build wealth. Your debt is reducing, your equity is improving. The value of the house is going up. You have more equity in the property. You're now starting to build wealth. Hey, look here. That is debt. Lender, borrower, mortgage. Well, our next cast, we're going to talk about automobiles. We're going to talk about credit cards, or maybe even personal loans, or maybe even student loans, right? We can borrow money for a lot of things. But look here, my followers. I want you to get in the habit of really paying attention to the amount of dollars that you pay in interest to the institutions that you do business with. We don't want to continue to make them wealthy. We want to make you and your family wealthy. Once again, if you need our help, it gets complicated for you, you reach out to us and one of our financial coaches will be there to help you. We'll talk to you next time.